September 15th, 2008, Monday morning, 上午8点. Lehman Brothers, the fourth largest investment bank in America, files for banks break. $613 billion in debt. That day, the Dow drops 500 points in a single session. Television screens show men in suits walking out of office buildings carrying cardboard boxes. A lot of people still remember that image. And here's the thing about that moment. It didn't come from nowhere. The pattern that produced it was written down 3,000 years ago. It's been proven, forgotten, and dug up again. After every crash, always after. Today, let's talk about why. Part 1. The I Ching isn't a fortune-telling book. When a lot of people hear I Ching, the first thing that comes to mind is fortune-telling, mysticism, an old man on the street corner flipping coins. That impression misses the point entirely. The I Ching, also called the Zhou Yi, was written around 1000 BCE. During the Western Zhou period, that's 3,000 years ago. And it wasn't a book of predictions. It was a book about how change works. Pay attention to that word. How change works. Not prophecy. Not fate. Patterns. The core logic is two things. First, everything changes. Second, change isn't random. It follows traces you can read. Inside, it is a concept you've definitely heard of, yin and yang. Most people's understanding stops at the black and white fish diagram. The real meaning of yin-yang, two opposing forces, mutually transforming, cycling back and forth. Day reaches its peak, it becomes night. Heat reaches its extreme, it starts turning cold. A rally reaches its peak, it falls. A sell-off reaches its extreme, it bottoms. This is a description of how systems work, not mysticism. Patterns. From this comes a Chinese idiom, 物极必反. When things reach the extreme, they reverse. Every school kid in China knows these 4 characters. But nobody tells them that these 4 characters are basically the underlying logic of how financial markets work. Go deeper. The I Ching has a hexagram called pi, blockage, adversity, and its opposite, tai, flow, ease. Pai ji tai. When things are at their worst, that's when the turn begins. Open any Western book on investment psychology today. The parts about extreme fear is a buying opportunity, and extreme greed is a sell signal. That's exactly what these 4 characters are saying. The only difference is Westerners spent 100 years and wrote thousands of books to slowly figure it out. Part 2. Wall Street rediscovered it 3,000 years later. Let me tell you about a man. His name was Feli ... He lived around 520 to 446 BCE. After helping the kingdom of Yu destroy its enemy, he withdrew from power at his peak and went into business. Historical records say he gave away his wealth 3 times, rebuilt it 3 times from zero, and each time became one of the richest men of his era. What method did he use? Sima Qian, in records of the grand historian, wrote down his core logic. Observe the cycles of heaven and earth. Understand the rhythm of price rises and falls. Buy when things are cheap, and sell when they're expensive. But he wasn't doing simple, buy low, sell high. He understood the grand trend and moved with it. He knew when the market reached an extreme, and he waited for the reversal. This is the earliest cycle investing logic in history. This logic didn't stay in ancient China. It traveled silently through centuries until Wall Street started rediscovering it, one crash at a time. 1929. America had been in a bull market for the entire decade. Everyone was talking about stocks, from bankers to the kid delivering newspapers. Everyone was borrowing money to buy. Everyone believed the bull market would last forever. There's a famous story from that era. A shoe shiner, while polishing an economist's shoes, started giving him stock tips. The economist went back to his office and liquidated everything. October 1929, the crash. The Dow fell 89% from peak to trough. The Great Depression began. Extreme polarity reverses. 1987. America was in one of the longest bull markets in peaceful history. That year, Warren Buffett wrote in his shareholder letter, "Wall Street is almost completely devoid of fear. What fills the air is euphoria." He said, stock performance cannot outpace business earnings forever. 7 months later, October 19, 1987, Black Monday, the Dow fell 22.61% in a single day, the largest single-day drop in history, exceeding even the worst day of 1929. What logic was Buffett using? Be fearful when others are greedy. Translate that into Chinese, and it's 物极必反. Extreme polarity reverses. 2000. The dot-com bubble. Any company with .com in its name saw its valuation go to the moon. Some companies with zero revenue had market caps larger than General Motors. The Nasdaq eventually fell 78% from peak to trough. Extreme polarity reverses. 2008. This time it was real estate and financial derivatives. Banks packaged bad loans into complex financial products, sold them as safe assets, and the entire system's leverage was higher than anyone thought. September 15th, 2008. Lehman falls. The S&P 500 fell about 57%, from peak to trough. Extreme polarity reverses. 4 crashes, 4 eras, 4 different stories. But the underlying structure of every single one is the same. The system reaches an extreme in one direction, then it reverses. Lao Tzu, in the I Ching, wrote, "When things reach their prime, they age." This is called not following the Tao. What does not follow the Tao ends soon. He wrote that 2,500 years ago. Part 3. Why does everyone say this time is different? So, here's the question. If the pattern is this clear, why does every crash still catch us off guard? There's a structural problem in human psychology. At the top of any bubble, you'll find the same sentence, repeated in different languages. This time is different. 1929. People said the Industrial Revolution brought a new era. The bull market would last forever. 2000. People said the internet changed everything. Traditional valuation logic no longer applied. 2008, people said housing prices could never fall nationwide. It had never happened before. This time is different, is the universal language of bubble tops. Why does this happen? Because the human brain wasn't designed to analyze cycles. It was designed for short-term survival. When a trend persists, the brain automatically extrapolates, assumes it will keep going. Psychologists call this the recency bias. Whatever happened most recently gets the most weight in your thinking. Here's a simple way to feel it. Imagine you've been watching a coin land heads 10 times in a row. Logically, you know the next flip is still 50-50. But emotionally, you start to believe it will keep landing heads. That pull, that instinct to extend the recent pattern is exactly what drives people to buy at the top of every bubble, in every era, without exception. The longer the bull market lasts, the more the brain becomes convinced it will never end. The I Ching has a precise description of this. The book talks about the Qian hexagram, extreme yang, representing the pinnacle. But there's a line in the commentary, Kan Long Yu Hu, the soaring dragon will have cause to repent. This isn't philosophy, it's a warning. When you're at the highest point, what you feel is invincibility. And that's exactly the most dangerous position. People at the extreme can't see the reversal signal. The I Ching observed this 3,000 years ago. So the answer is, it's not that people aren't smart enough. It's that at the extreme, emotion systematically overrides reason. Every era has smart people. Every era has bubbles. This isn't individual failure. It's a built-in flaw in human cognitive architecture. Knowing this can't guarantee you won't make mistakes, but it gives you a framework. When everyone around you is saying, this time is different, those 4 characters should ring in your head. 物极必反. Part 4. How to use this framework. I'm not going to tell you what to buy right now, or where the market is positioned today, because in the logic of the I Ching, there's never been such a thing as a precise prediction. What it gives you is a sense of direction, not an answer. But it gives us 3 questions worth asking yourself. Question 1. Does your position have an extreme feeling? Extreme doesn't mean how much it's gone up. It means sentiment. When you hold an asset and everyone around you is talking about it, and the media covers it every day, and the people in your life who never discuss investing start asking you how to buy it, that's a signal. It might not be the top, but at that point, the risk and reward are no longer symmetric. Question 2. How much of your current judgment is based on recent trends? If your main logic is, it keeps going up, or it's been performing really well lately, be careful. That's the recency bias at work. The I Ching way of thinking asks you to look at a longer cycle, not just the past year, but what full arc of this thing looks like historically. Question 3. If the market reverses, what's your plan? Not, if it falls, I'll cut my losses, but did you think about the possibility of reversal while you were still buying? Pai Jai Lai means extreme adversity is where the turn begins. But the premise is that you still have resources when that moment comes. that you weren't emotionally captured, and the top, and forced to sell everything. These 3 questions aren't new. Fan Li was using the same logic 2,500 years ago. Buffett has been saying the same thing for decades. But each of us has to relearn it, usually through our own losses. Maybe this is another core idea in the I Ching. Cycles aren't just market cycles. They're also cycles of human cognition. We forget, generation after generation, and we rediscover generation after generation. There's a line in the I Ching that has stayed with me. 穷则变，变则通，通则久。When you reach the end, that's when you change. When you change, that's when you break through. When you break through, that's when you last. It's not just about markets. It's about all systems, all cycles. And here's what I find remarkable. These words were written at a time when there were no stock markets, no central banks, no financial derivatives. And yet, the pattern they describe has played out, without exception, in every financial crisis in modern history. Next time someone tells you, this time is different, you'll know what to think. 物极必反. Extreme polarity reverses. Next time, we'll talk about Fan Li, the man who gave away his wealth 3 times, rebuilt 3 times, and each time ended up richer than before. What did he know that other people didn't? See you then.